to our session for this afternoon, covering horizontal support resistance for our usual session. So I'll sort of just run through how I look at things in terms of looking for levels and how we can possibly trade those levels. Okay. Before we get going, we just want to run through the disclaimer quickly. Spread betting, forex, and CFD trading carry a high level of risk to your capital and can result in losses that may exceed the initial deposit. Trading products may not be suitable for everyone, so please ensure you understand all the risks associated with trading. Information and comments provided here and in no circumstances are to be considered an offer or solicitation to invest. Information provided is believed to be accurate at the date the information is produced. Nothing here should be construed as investment advice, and information provided in the room is the personal opinion of the moderator and not Tradimo. This content does not constitute financial or tax advice, and Tradimo does not accept any liability for the content of or comments made during the session. Right, guys, so what we look at today are support resistance levels. Now, in terms of horizontal support resistance levels, I'm going to run through a few different names in the room. So what I'm going to do is do a quick basic rundown in terms of what the textbooks teach, and then just kind of run over what I look at. Okay, so essentially what you have is you have a area on a price chart. Just imagine this being a level of let's rephrase that. Let's say price comes down to a level like this. I'm going to just get line. So price comes down to an area on your chart, and what happens is you have buyers then coming in off this area, okay, and they repel price and they move it up. Now, what happens is this area now, if price comes back to it, I'll just change the color. This area over here, line, if price comes back to it, it's going to be looked at as potential support. Okay, so if we have price do this, and I'm just going to redraw this. So what happened? Price moved down to the same area. Then what's going to happen is buyers are going to look to come in at this area here, and they're going to look to try and push price up. Okay, so they're going to try and come in off this area, because what they've seen previously is over here on the left, price has been repelled where more buyers have come in than sellers, and that gives an opportunity to get in again when price gets back down there, in the hope that more buyers will come into the market. Okay, now all I refer to this as basically a double bottom. So we have price come down once, it comes back again, and that's at the circled area where I will look for a trading opportunity. Okay, now on the reverse side, we have just the opposite play, where we have an area on a price chart. Okay, now price moves up to the level, comes up, hits the level, it then reacts to the level. So it comes up, hits the level, it reacts. So we have more sellers coming into the market. And now, essentially what we're looking for is when price approaches this level once again, we're going to look to see if these guys will come in again. So the sellers, we're looking for the sellers to come in the market once again, and we're looking for them to reject price off this area. Okay, so this is referred to as resistance. Okay, so we have resistance, and over here we have support. Okay, now what I'm doing at the moment is I'm just running through the basics, okay, in terms of what you'd see in a textbook. And so this is kind of classed as your theory stuff, right? And I'm going to show you how I kind of look at it a little bit different. So essentially support, where price is rejected in the past, and we look for price to be rejected again. Resistance, price is rejected in the past, we look for price to get rejected again. Okay, those are the two basics of support and resistance. But now we have something slightly different. Okay, so let's say price has come down, it's hit the level once, acted as support, price came down again, hit the level, acted as support, price comes down again, but this time support doesn't hold. Okay, support here doesn't hold, and we get more sellers than buyers, which means the level basically pops. Right, so now we're looking for is we no longer look for support, but when price comes back to this level, we're now looking for this level to act as resistance, okay? So we're actually looking for what we term a price flip. So we're looking for price to come back up to the level, and we're looking for it to hold as resistance, and we're looking for a selling opportunity to continue lower, okay? Now, if we go back over here, just the opposite. We have resistance, so we had sellers come in. Then we had sellers come in again, okay? Then we get a move up through the level, so breaks the level. Resistance is no longer held. So what we look for now is we're going to look for support. Okay, we look for price to come back to this area, and we're going to look for it to hold as support. So if it comes back here, I want to look for a buying opportunity, and I'm looking for price to move up off the level. Okay, so pretty straightforward, I think. So this was resistance in the past. It's now become support, or we're looking for it to become support. So we're looking to buy as close to the level as possible. And up here, when price holds a support breaks through, we're looking to sell as close to this level as well. Okay. So any questions on that, guys? Just feel free to ask. So that's the theory side of it, and that's essentially what you're going to find in the textbook. Okay. But the problem comes, the problem comes from a theory point into an application point where, we sit with the market in front of us here, and we just don't know, where to be drawing these levels, or how we should draw the levels. Now, what you find all over the place is some guys, if we look at candles, will say you should draw them on the wicks. So, if we draw these levels like this, we should see price come back down and test the wicks. Okay. Other guys are going to say, well, you should draw them, in between the wicks and the bodies. So here's the bodies of candles, here's the wicks. So, somewhere in between. So we've got an extreme point here. So somewhere around here, that looks pretty good. We had support and support there. Okay. Other guys will say, well, this whole area is a big zone. Okay. So big zone, and then what? Now, what do we do with the big zone? Okay, so that doesn't really help me either. Now, what I find over the years is just a very, very simple approach. Okay, so what I'm looking at, instead of looking at a price chart, now this is a daily chart, and it can be any chart you want. Instead of looking at a price chart, and actually let's just go to an hourly chart. I've done this quite a few times before. Okay, what I'm going to do, in fact, before I move the chart, I'm going to go into my color setting here. Okay, so color, and all I'm going to do is I'm going to change all the candles on the chart. Okay, I'm going to change all of this to white. And what that's going to do, okay, is going to give us a blank chart. All right. So what I'm going to do now is just scroll this across here. And all I want to do is take a horizontal line, and I want to show you how we can project or predict where the market can turn. Okay, because as I show you with the theory side of it, the price respects these levels amazingly. So if I just randomly place 5 lines, okay, and I have absolutely no idea what this chart looks like, I'm just going to place 5 random lines on the chart. 1, 2, 3, 4, 5. Okay. If I then go back to my properties and I just get my candles back on there, okay, now what we can see, now remember these are just completely random lines on the chart. We have a situation where this level here held as support along the way. Okay, it then spiked through, and it came back, found support again. You can see our support was held there. It then came down further, and it found support at our next level here, moved through, okay, came down to our next support area, rallied up, and it found resistance before breaking down. Okay, this area, see, in the past it was support, but now it actually closed below, and then it moves through resistance, and it kind of moves between support and resistance. You can see how every time price closes through the level, it kind of comes back and forth. And then over here, price comes back, it finds resistance before it sells off hard. And here we have price coming to support, but then it flips to resistance. You see resistance there, and there was also resistance there, okay? And then it comes down further into this level, you find support, it then flips to resistance there, sells off, comes down again, finds this level, and rallies quite nicely. Uses again, resistance, support, okay? Get the idea. Here again, we just kind of step it forward, shoots through the level a little bit, holds, support, flip resistance, okay? These were random lines, guys, okay? Absolutely random. Yes, just to a complete guess where to put the line. But you can see the market's respected them, all right? So to me, marking up levels like this, okay, where we can go and take horizontal lines that the textbook doesn't, put a line across here and here and here, and then say, this is going to come back and respect that. Drawing it like that using all this previous data, to me, is just complete random, okay? Complete random noise. So I personally just think it's a complete waste of time marking up a level like that, and I hope drawing those levels like that, like I've just shown you, will give you a little bit of food for thought, okay? And you can go and do it on any time frame, any chart, do the same exercise for yourself and see what you come up with, okay? It's going to be the same thing. So you need to ask yourself the logical question is, does this stuff actually work? So that leaves us with a predicament in terms of, how do we actually use these levels? How do we find areas where we can actually trade from? Okay, so what I'm looking at things a little bit differently now. In the case of a downtrend, obviously this down move here, okay, instead of, when I'm marking up levels, instead of going all the way, let's just go to a high time frame because we're in such a big trend. So instead of looking at all of this and this, going back weeks and months, when I'm looking at this swing here, okay, when prices move down, when I'm looking to sell, obviously I'm looking for areas of resistance. So that means price needs to obviously move up. Okay, so for me, I'm looking at this last swing down. This is the most important swing to me, and I'm looking for any retracements up here where I can look to sell short from, okay? And this is the most important leg. So when I'm looking to analyze the market for selling opportunities, this is the leg I'm paying the most attention to, all right? And when I'm looking for buying opportunities, what I'm really looking for is I'm looking for price. If it breaks below this swing low here, then I'm going to look at the last leg. Now, this is because we're in a big downtrend, I need to get this right up to daily. But essentially what I'm going to look at is anything to the left across here that price hasn't seen, okay? And what I'm essentially looking at is I'm looking at this here, okay? So from this low to this high, all right, price has moved down, and as it's moving down, I'm focused on these areas along here, okay? So as it's moving down here, I'm looking left here. As it moves down here, I'm looking left. So as it moves down here, I'm looking to the left here on this, all on this last leg. I don't care what this stuff here is doing, okay, or back here. I really don't care at all. So as price moves down, like for example, we have this little area here. Our price is obviously drop. It's coming here, this area here. Maybe there's something in there, and I need to zoom up, and I can essentially see in this layer there is actually something of interest, okay, which is this little bearish candle right over here, okay. So that's how I'm looking at support resistance. I'm looking at these different swings. So the swing up and a swing down, and I'm always focused on those swings. It doesn't matter in what sort of capacity in terms of the size of the swing. So if I was on a 15-minute chart, for example, then I'm going to be looking at the same thing. I'm going to look at a swing up and then a swing down, okay? So in this last swing down, I'm going to be looking for points of reference. In this little swing up, they could also be points of reference, but it may just be on a very smaller time scale, okay? So I'm always looking at these major swings. As price breaks lows, I'm looking further to the left. As price breaks highs, if it broke this high here, for example, then what I need to do is I need to find, what is above this high. So here's the high. It's above this high to the left that hasn't been seen. So we've got an area here that stands out to me, and then all the way kind of up here. Okay, these are two pockets of order flow where it'll probably have to find some kind of selling. All right. So it's very different from the standard horizontal support resistance teachings that you'll find in the day-to-day books. Okay. So that's essentially how I'm kind of marking up levels. If you guys are on that or you're not sure kind of what I've gone over, then obviously feel free to ask. I don't mind running through any of that stuff. Now, as I said before, what are we going to look at? Are we going to wicks, or are we going to look at the bodies? Now, from experience, what I like to do is I like to get in right down to the base, and I like to chop off these wicks. So in this case, as my explanation has just sort of run through, we've got a swing down, okay, and a swing up, okay. So in this little swing up here, what I want to do in terms of reference points, obviously we've got a wick here, this little wick high, that could be an area to look at. There's another couple of wick highs there. And then we've got this area here in the base, this little bearish candle. I'm going to chop that wick off, okay. So essentially, if price gets down to that area, I would be looking on a smaller time frame and just watching this area here for a possible buy opportunity, okay. And I will look for possible patterns that set up at this area. Now, we haven't gone through, or actually, I think we have done quite a bit on patterns already. So, in terms of reversal patterns, there's quite a few that I eye out. One of them is very simply just a 79% retracement. So, the pullbacks that we've made. See, we pop all these highs. We've clearly got some bids coming through. So, any pullback here, 786 is the number I'd be looking at, okay? Very, very straightforward. The other pattern that I look at is the head and shoulders or Quasimodo pattern, and price pulls down like this, okay, but then rallies. So it's in here. Now we obviously could be good patterns, and this is kind of how I like to trade support resistance, okay. Then we get a pop again, and now we're starting to retrace. If I see price coming down and I see it coming into this area here on the left hand side, then that to me is a very high probability buying opportunity, okay. This is a reversal pattern. So I'm looking for this left shoulder to equal the right shoulder, okay. That's another bottoming out structure that's quite common, okay. One of the other patterns which we cable earlier, I'm going to go to cable quickly. You see the guys are selling this thing off again without us, unfortunately. But one of the things that I look for in cable is where we have trapped traders coming into the market. Okay, so we get a 3 or 4 drive down into a key level. So here's 1 push, 2 push, 3 pushes, and then we get something like either a false break, or, so what I mean by false break is we get something that looks like this. We get a spike. Okay, the spike is a very good indication that we have orders coming into the market, okay. Another very good indication is something like this, where we get a 2-bar reversal. Now, 2-bar reversal is essentially where we have one color bar of, let's say size X, okay, and then we have the opposite color bar coming in on the next candle, all right, being the same size, okay. So for example, if the one candle is 10 pips long and it's bearish, the next candle is bullish and it's also the same in terms of the pip value, okay. Does that make sense? Right. So these are certain ways of obviously finding our key areas, okay. Chopping off wicks, so we've got a key level. How we trade it is, it's really going to come down to the individual. Now, do you have time to trade, smaller time frames? If you do, then that's great. Then you can look for confirmation, okay. Otherwise, realistically, you've got to look at higher time frame patterns, okay? Patterns like on an hourly chart, for example, we had down here, for example, we have, now I know that this is a daily level of support down here. What we had coming off this area here was a bullish bat, which is a buy opportunity here at 886. Now, that's another one of the patterns that I look for. Okay, let me just look at the 30-minute because it's a little bit more in terms of what you'll see. But essentially, that's kind of the buy zone there of this pattern. Okay, so if I trace this out, okay, now if you study this pattern, it's very straightforward. Well, I say very, it takes a little bit to get used to, but push up, so this would be labeled X at the bottom, A at the top, B, D is the buy zone. So within this little 5-6 per block is where you would look for the bids to come in at, okay? And that's really one of the patterns in terms of confirmation, okay? Now, there are literally tons of different patterns out there. You just need to kind of find, you know, one or that kind of fit your trading style or your personality, okay? Hopefully that makes sense to you guys. Any questions on that, guys? Okay, you want to try and keep it as simple as you possibly can. Okay, so you know, don't overcomplicate it. I see guys doing, you know, really weird things. You know, they've got 6 moving averages and then they've got 10 indicators and all this kind of jazz. You know, you don't need all that stuff. Okay, I would say, you know, if you need to use an indicator, maybe use one and just, you know, keep it as simple as you possibly can. Okay, so maybe a divergence or an oscillator or something like that, you know, that's kind of helping you to find turning points, right? Maybe you want divergence down there. You know, let's say we went to a minute chart and we went into MACD. Now you've got different settings of MACD, but you'll see this in 5 minutes. You'll probably see some divergence across here. So you see like price moving down here. This is a support area down. We've got bullish divergence on the MACD. Okay. You know, things like that could be options in for, I don't know, trendline break or whatever for entry or bullish candle on the high time frame, whatever. There's tons of different ways of doing it. You know, that may be an option for you. Maybe you just want to use, you know, for divergence around these areas. Okay, so you know, that can help you see you know, with turning points, etc. Okay, we've got divergence, price looking to sell, maybe simple break and retest of trend lines, or whatever the case is. Everyone's going to do it a little bit differently, but I'm just giving you an idea of, you know, how you can go about using these things. Now, in terms of time frames, okay, this is the absolute key. We want to use time frames that are more on the higher time scale. Okay, so what I mean by that is, you know, look at things like, even if you're a day trader, look at your time frames, your weekly time frames, your daily time frames, your 4 hour. Okay, spend more time on those time frames. And if you like to enter on a 5 or 1 minute chart, try and find out what's going on in the higher time frames. Okay, like for example, 4 hour chart, we came into key resistance here. Okay, see we kind of drop down, finding support across here. So you essentially trapped between an area of support down here and resistance. Now the resistance area, if we go down and look at a chart, you know, it's messy, but you'll see prices obviously moving up, and we were kind of eyeing out this level here. Prices spiked up there, for example. Now, you know, if just trading a 5 minute chart, it'd be very difficult to kind of find, you know, why price is turning like this, or even, you know, down here somewhere, if you don't have an idea of what the higher time frames do. So, you could be going long and buying and buying and buying, but, if you're buying straight into a brick wall, which is the resistance, you're going to find, this kind of thing happening. Or, you're selling, price hits support and it bounces, whatever it is, 20 pips, or whatever the case is, okay? It doesn't mean that these levels won't give up, but we need to try and assess what the rest of the market's doing, okay? And that's kind of just reading price. But, not knowing where these levels are, just trading completely blindly, especially if you're using, small intraday stops, it can really be a problem, okay? So just for example, like, we've got resistance up here. Let's say price hits resistance. It's just a matter of, finding how you want to trade these levels, okay? Now, I'm not a huge fan of candle patterns. I just think they get you in way too late. I do look at, obviously, candles, but I'm not essentially looking at them and saying, oh, this is this pattern, let's hit the bid or hit the offer. I'm looking at it in terms of key areas of support resistance, okay, and what the candle or the bar is telling me, okay. These little spots here, when I see price pushing up like this in kind of a wedge formation, and we get a spike like this, that's normally a good sign that we should see something come off, okay. It doesn't always work. We were watching this area here, we got a little push up here, and we started seeing signs of weakness here. And price sold off quite nicely, but it just, earlier, it just didn't hit our target. Okay, so, yeah, we could have been a bit more aggressive on it in terms of getting the risk out. That was an option. But, couldn't all the time, unfortunately. Okay, so in terms of trading these things, as I said, we've got so many different options. We've got, these 3-4 drives into the levels. You could also watch, candle patterns, higher time frame candle patterns. Here is, if we just look at the hourly chart, you see this rejection, we get this consolidation, and we get a false break here. That gives us a little hammer formation. Now, in terms of, a textbook pattern, it's not a very nice looking pattern at all. Okay, it's actually a very poor looking pattern. In the context of it, with the false break of this area where we've got a ton of stops, closes back up, that's a good sign to get long, okay? It's a very good to get long because it's telling us we've got a lot of trap traders in play, all right? Any questions there, guys? You guys kind of just making sure you guys are happy and understand what we're looking at and why we're looking at it. Okay. So in terms of obviously the levels, we're obviously looking at support resistance levels. I want to get into the base, okay, into the base of these things, chop off these wicks of these candles, and then when price comes back up there, you're looking for, looking for those reactions to take place, okay. Looking for those reactions to take place, and as I said, either waiting on confirmation, okay, so like a pattern, all right, or you can get in just at the level, but I would say you've got to know your stuff and practice, okay. Practice, when I say practice, forex tester, those kind of things work pretty well, okay. Now let's have a look at this. So we had, hasn't closed on the hourly. There's this 4 hour. It'll be interesting to see where this 4 hour close on the hourly. We've had this consolidation. Prices dropped heavily. Find a bit of support here, and it's rallied now. And this area is likely to find resistance. Okay, so either sell short when it comes back, and they just blindly, or going down to the smaller time frames, you can have a look and assess what price is doing. Okay, what price is doing in terms of little spikes, false breaks, that kind of thing. Okay, just have a look here on the 1 minute. Okay, so looking for false breaks, etc., wedges, tops, that kind of thing. Even simple little trend line breaks at these areas can offer pretty decent little trading opportunities. Okay, now 1 minute can get seriously messy, so 1 minute may not be the best option when starting out, but 15, and I would, when starting out, I would just stick with one. Okay, stick with one and just see how that plays out for you. See how that plays out. Simple things like playing a trend line break, for example. Now this is a 1 minute chart, so it's not as reliable as, let's say, a 5 or 15 minute chart, but let's say we get a nice close below, then what we're going to look for is we can look for a retest at the back end of the trend line to sell short. Okay, now I'm obviously just giving you some options, and the 1 minute is not it's not the place you want to really hang out with if you're kind of new to this business. Okay, because it can get you in a lot of trouble very quickly if you're not careful. Okay, so let's just see what happens if we get a close below here. What we're going to look for is we're going to look for a retest, okay, of the trend line. So there's the close now. Now I'm going to do this as an exercise. If we get a pullback now, so we want to pull back like half a pip. We want to sell short with a small little stop on this. Let's just see if we can do this. And this is really just an idea of what you can do around these areas. Okay, they don't all work, but at least it's giving you confirmation to kind of get in on these things. Okay, now short, I got filled a little bit late on that. Stop loss on there, we want to put it literally about 107.16 area. 107.16. Okay, so I got full too late. That thing didn't push through fast enough, so we've got a poor full, but we've got about a 2 pip stop and the back, and you see it has reacted to the back end of that trend line. So that's your confirmation that you're looking at. Now you're trading the key resistance area here. Okay, this was the hourly level, remember, that we marked off, and it's essentially just, if we just go back here, we've got this consolidation here. Price closes, the first time prices closed below this level. Okay, then prices come back and it's retested as resistance. All right, so as I said, we've got a few options in terms of entry. We get the break and then we come back and retest the trend line. So this is just a very simple option of execution. Okay, there's literally tons of them. Now obviously, as I said, a 1 minute chart is being a very aggressive option, but there's nothing wrong, there's nothing wrong with it. We just want to obviously make sure what's going on the rest of the picture. We've got support here, which is a bother for us right there. See the bid still coming in, and we get taken out. Okay, so now we just push deeper into the trend line here, still very well bid, and you can see the sellers coming in again deeper now. So these are the kind of things you want to look at. You see the sellers coming in again, this time obviously quite heavy. You can take another go on here. Let's see, maybe you want to stay for confirmation. Problem with getting in with confirmation is kind of you get in a lot further and you can get stuck with a lot of noise. Okay, so we get in here, we got filled late, and now you can see we're coming off, but we get taken out. Maybe you wanted to stop, maybe you wanted to stop above the high there. You see that the rejection that we get off, that's pretty decent. But I'm just giving you guys an idea of how you can look at entering these things. If we get taken out for 2 pips, that's fine. We've got the potential to run it down for 8 or 10 pips quite easily if it goes. But you know, with the noise, especially in intraday on spot market, it's very noisy. Okay, it's not like some of the indices and stuff. A lot smoother, a lot quieter, not prone to this kind of nonsense as I referred to. Okay, but there's just an option you guys can look at in terms of entry. Okay, so we find the key level, and then it's just a matter of finding execution points. Okay, so either you want to look at getting involved on the top end as it's moving into the level, so something like this, bang, 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 bang here. Wait for confirmation like after a spike, that's another option. Or you can wait for the break and retest, okay? But that doesn't always happen, okay? It doesn't always happen. And the higher you can get in terms of, you know, getting on the retest here, the closer you can get to these levels, the better it is for you, okay? So if you can enter, you know, on a break and a retest up here, for example, it's going to be better than trying to get in, you know, all the way down here, because price can quite easily come back on you for that retracement. Okay, so just keep that in mind. Okay, but I would say in terms of kind of using these things, you know, look at like, you know, 5 minute, maybe 5 minute candles. They're probably going to be in fact, there will definitely be a lot less noise than the 1 minute stuff. Okay, the 15 and 5 would be probably a good starting point for you. I mean, we've kind of missed the boat there a little bit, you know, and that's the way it goes. Okay, it's the way it goes. It's kind of gone literally less than a pip against us. Okay, but if you're not sure about patterns and stuff, there's plenty on the website and educational stuff. Otherwise, book-wise, there's also some very good books available. But you know, technical analysis books are quite pricey, to be honest. So it just depends on your budget. Okay. Any questions on that stuff, guys? You guys happy with entering at levels? Okay. So, you know, you can maybe wait for, you know, confirmation. That could be an option for you. Stuff to sort out. Right. So just having a quick look here, guys. In terms of confirmation, you got a few options to play. Okay. One, find for aggression moves level. So spikes. Okay, spikes are very good signs of larger flow hitting the market. Okay, whether in this case it's coming through on the offer, or in the case down here on the bid. Okay, in terms of candle patterns, I'm not a huge fan of candle patterns, as I've said before, but in terms of confirmation, giving you, you know, just a bit of weight to say that the level is for. Look for things like your pins. I would definitely, personally, I would look for more than just a pin, because pins are not, especially on small time limits, they're not that reliable. Okay, so try and get things like your bullish, bearish, engulfing type candles. Okay, things like this down here. Okay, you see this big bullish candle here. Okay, try and find that kind of thing. If you can look for those things, big bullish, engulfing, outside bars, that kind of thing there. And then you get something where you've got an inside bar followed by an outside bar. Okay, so I think they're referring to them as a pop gun. They don't happen very often, but they are pretty reliable. Okay, so just keep an eye on those. As I said, I'm not a huge fan of candle patterns. I mean, you know, even here we've got possible, you know, you could maybe say this is some kind of, you know, evening start candle pattern. I don't know. I'm looking for spikes, okay, and I'm thinking about how the larger flows are going to enter the market, okay. Now you can see we're down support here, back into the top end of the trend. And the other thing, obviously, just be wary of that. Sometimes you are going to come up and get retested on the trend line. You know, get a spike, get a bit of rejection, comes into support. That support needs to be cleared. Back up, you can retest resistance again. You know, and you can possibly look at executing, you know, when prices really kind of show that it's holding. So here, for example, we've got a possible double top coming in play with, you know, possible rejection. So, you know, different ways of doing things like this. I can't say, you know, this is right, this is wrong. You've got to go in way and kind of figure out what suits you in terms of the individual. Because this is so discretionary, each little element I show you is going to fit, you know, some of it's going to fit perfectly, and others is going to be, you know, just a complete nightmare. Find it, you know, extremely difficult to get anywhere with it, okay? Maybe you need something a little bit more rule-based, for example. And in our next session, we'll cover the method that we've done a bit of testing on and stuff, okay? Because I think that's nice and mechanical. It's got a mechanical phase, but it's got a discretionary element. You know, just a pure, plain, simple mechanical strategy. Very, very difficult. I personally don't think you can find one on the lower time frame stuff that's going to be profitable, okay? Especially small time frame, very, very quick, lot of vision involved, okay? High time frames, a little bit more interesting. Now you see this little spike here. These are the kind of things you want to watch for. Now this little candle here, not necessarily a hammer or anything like that, but you know, a little spike back into the trend line here, and it's coming up above the highs. So watch those highs as well. Now I've got this trend line here, 1, 2, 3, and I'm looking for a push up. Okay, and I'm looking for some kind of rejection this area. So really for the area to kind of be tapped out. Okay, there's a shoot now. If we see, you see this heavy push, if we see weakness here like this and we start moving back down, let's just see if we can do if we move back down, we close kind of below this little trend line here. That could be a very good score. Some decent sellers coming in. And it's a 1 minute. You see the close. It's a bit of a spike, but ideally I would have liked to have seen it, you know, close back below, because what you have now is you have a situation where this area could actually hold as support for a move up, okay? So you'll see we got this area, resistance. It doesn't hold, and then the guys come in there, but there you see buying it off this line. So that is a slight bother. I would prefer it to close below the level, sell short, possibly retest as resistance here, because now it's obviously holding a support. That doesn't mean it can't come down and close back below, but you see the guys trying to bid this thing off here. So keep in mind when you get these trend lines, okay? And that principle can be used anytime, okay, on any time frame. So it's just something you want to be aware of, okay? So I think I'll leave it at that for now, guys. I'll have a few minutes. I've got to set up the other template, and then we'll come back and we'll run through other setups, okay? Sorry, what torch stops? Were you talking about? What were we talking about? Wide stops? These maybe? Yeah, they do. So what I like is I'll try and look for, get those candles, bearish engulfing type candle, but then try and get it on the retest. Okay, now you see what happens here. We stayed above, we close back below. That's a good sign. Okay, now there's a nice engulfing candle. So you could get short with a stop up here, or you could try and wait for the test. Now this is a 1 minute chart, so it's not as reliable as a time frame, but the concept still remains the same. Okay, so you could sell here, or you try and sell on a retracement. Okay, try and sell on a retracement to obviously save yourself some pips. Now, obviously in this case, if we sold here, the stop's going to be above the high. It's around 3.5 pips. Not a big deal. Okay, but let's say this is a 4-hour chart. I want to try and sell here on the retest there. That's where you want to sell on the retracement. You see how the guy pushed it off, the immediate reaction, and we covered the spread, etc. Now that could be any time from you want. Let's say that's a daily or 4-hour, whatever, and we can put a stop above there. Okay, so you see the gap. The guys have wide on this, and I don't know. Okay, so just put 107.1. So we got a 2-point stop on there. And as I said, in terms of the time frames of trading, it's very, very small stuff. This market just doesn't like this stuff very much. A lot of noise. But essentially, you can use the same concept that we're showing you here on 5, 15, 30 hourly. Ideally, try and find it on an hour or 4-hour chart. Where you get a candle like this, a nice bearish push down. You've got resistance, and then you look for retest. That's going to save you. Instead of selling short here, you see it just boom straight up. Instead of selling short here, okay. Now this is only 2 pips, but this essentially could be 60, 70, 80 pips on a 4-hour chart. So if you can halve that by waiting for retracement, okay, you're already miles ahead. Just keep that in mind. It doesn't always happen, so have your game plan in place, whatever it's going to be, whether it's going to be a retracement and retest, or you're going to sell on the break, but obviously much larger stops. Okay, and as I said before, I'm going to come to individual guys. I can't say the one's right or the one's wrong. I like to get in on a retracement versus chasing. Okay, but if for instance is a 1 minute chart and I get in on a spike and it's going to cost me 5 pips or something, I'm happy with that. Okay, it's when it starts getting way up there in the high 20, 30, 40, 50 pips, then I'm like, no, not going to work. Okay. So I hope we've covered that. All right, guys. We'll leave it at that. As I said, give me a few minutes. I've got to just load the next template, and I'll be back with you in a bit. Cheers, guys.